first of all, let's take a look from a historical perspective. This chart shows how the amounts of goods flown around the world in the airplanes moves almost the same way as the world trade has been moving since 1990. And it shows that when the blue line representing world export goes up, the red line representing world air cargo moves along with it. It means that when countries trade with each other, they send stuff in the air, and the airlines and the air cargoes give some wings to fly. So, what drives the trade? What drives the growth of the trade? Let's crack down this economic story with these two charts in front of us. On the left-hand side, this chart shows the real GDP growth in the world economy since 1990. And you see that this line zigzags. The world economy has been through its ups and downs. And we can see there are two notable dips that brought the growth into negative zones. The first one is in 2008, that's the global financial crisis. And the second dip is in 2020, which we all know what happened. What's important here is that the world economy has been tough. It fell down, but it always comes back, as you can see here. Nowadays, we can expect the world economy to stabilize at around 3%, which is roughly the average if you look at the long history of world economy growth. And the IMF now expect the world economy to grow at 3% this year and 2.9% next year. So let's move on to the right-hand side chart. This chart compares the total trade of the world and the total size of the world economy. And we saw a marvelous rise during the past several decades, since at least 1960, of the trade GDP ratio. And this ratio just keeps going up, which means that the trade has been a driving force during this expansion of world economy, and it's been playing a more and more important role. And this trend peaked at 2008. After that, we see a gentle glide down after that. So that signals a change that countries seems to be looking more inward and trade a little bit less. If you look at the numbers, this is not surprising. In 2022 per se, in that 1 year, there are almost 3,000 trade barriers were put up worldwide. And this is a big jump if you compare with less than 1,000 that was observed in 2019. So what does it mean for air cargo and what happens in more recent years? Well, this blue line indexed to January 2019 as 100 showcase a high frequency data in terms of industrial production. This is what we use to observe economic development in absence of lower frequency GDP data that's always sometimes lagging. So from this blue line in the monthly frequency, we can see a strong rebound and a recovery from the pandemic. But what about the trade? Consistent with the long-term run, we can see that trade also comes up, also grows, but not as good as industrial production, not as good as the broader economy, especially during the end of 2022 and throughout the 2023. So what does that mean for air cargo? Here, this green line is the movement of air cargo traffic, and all of the three lines are indexed to January 2019 equals 100. And you can obviously see that in 2021, air cargo obviously outperformed the trade and economy growth, which you see that green line rise above the blue line and the red line. And 2022 saw a downturn for air cargo when the green line deviates from the blue line and the red line. And then in 2023, we saw air cargo recover and trying to converge, the green line is trying to converge with the red line and closing the gap. So what happened during these years? Well, in 2020 and 2021, when nations went into lockdowns and when air passenger flights were grounded, that's when air cargo entered the center stage and played a vital role in maintaining global supply chain. The air passenger flights that comes along with the passenger belly capacity used to carry more than half of cargo capacities, which you can see represented by the red area. And with the sudden pause of air passenger traffic, we saw a severe shortage of cargo space. But in the meantime, the demand for time-sensitive and fast deliveries is still there. So that's when airlines creatively innovated these freighters by converting air passenger crafts into cargo carriers. And these freighters played a critical role in delivering essential items, for example, the personal protection equipment, the medications, and eventually vaccines around the world. And this is when air cargo came in to rescue and became the hero during these hardest times. In the meantime, another important driver of the air cargo demand comes from the change in consumer habits and the surge of e commerce. So, when people around the world rely more on online shopping and fast delivery, air cargo became instrumental in adjusting and supporting to this new economic dynamic. So that's what happens in 2021 when many industries face downturns and even shut down. Air cargo actually shows remarkable resilience and even growth. Well, in 2022, we saw stability of a global supply chain and less urgency of a fast delivery, and that's when the demand of air cargo start to diminish. In the meantime, we also see, as you can see here, the increase in the red area. We also see a strong coming back of air passenger traffic, which brings back the passenger belly capacity and loosen the tightness of cargo demand supply gap that we experienced. So let's zoom in and see what happens for each region. What have they been through and what's the recovery? Among the total global air cargo market, airlines registered in Asia Pacific takes the biggest market share for the past several years, and they're represented by the red dash line here. You can see from this line that there has been ups and downs during the past 3 years, also affected by macroeconomic headwinds, and it's now converged to pre-pandemic levels and stays within 1% of pre-pandemic levels during the past 3 months. So I would say it's pretty stabilized. And the second largest market is the North America. That's represented by the blue line here. And you can see a strong growth in that region that's most attributed to the surge in e-commerce. And I have to admit that I personally contributed to that, definitely more than average per capita. Um, According to the data from US Census Bureau, the size of US e-commerce surged by 43% in 1 year in 2020. The size increased from 570 billion US dollars in 2019 and increased to more than 800 billion US dollars in 2020. So that surge helped to boost the demand of air cargo in this region. Following that, we have the gold line representing Europe and green dotted line representing Middle East. They all showed similar patterns as we saw for Asia Pacific, but except for the macroeconomic impact, they're also affected by geopolitical tensions in this region. First, the war in the Ukraine, and then more recently, conflicts in the Middle East. Um, and then we have the purple line representing Latin America. They saw a lagging during 2021, but they have now almost fully recovered to pre-pandemic levels. Last but not least, the gray line represents Africa. They started from a low base, and they also benefited from being less affected by COVID. They show a strong and continuous growth during the past 3 years. Looking forward, we have already introduced how trade has been the essential, the most important driving force for air cargo traffic, and global trade looks set to improve. The IMF is expecting a growth of global trade at 0.9% in 2023. This is not just the path of global demand, but in the meantime, it's also affected by, for example, um, the strengthening of US dollar, which is the currency that most of the air cargo goods are invoiced in. So when the USD appreciates, the air cargo goods becomes more expensive for the world to purchase. So that's one force, and of course, more war barriers also comes into play. that's behind this 0.9% growth. And for 2024, the world trade is expected to increase by 3.5%. What does that mean for the air cargo? With all of these variables coming to play, the GDP, the trade growth, the inflation, unemployment. So we use all of these variables, and now we expect the industry to decrease by 3.8% this year, with Latin America being the only region that's going to have a positive annual growth in 2023. And then for the next year, 2024, we're expecting all regions to register positive growth, led by Middle East with a 12.3% growth, and Europe with a 4.1% growth, and we expect the industry to grow at 4.5% on average. So far we've been discussing about air cargo traffic volume, which means we've been talking about quantity, but there's another item in the revenue equation, which is the price. So let's take a look at the yield. The yield price has been on historically high levels in 2021, and we just saw that this is when the demand and the supply play together. There's a surge in demand, but not enough supply to come along. And during the past 2 years, we saw yield price coming down from its peak, and there are two forces coming into play. One is the coming back of passenger traffic that brings the passenger belly capacity, of course, and the other one comes from the stabilization of global sustainability, and the previous backlog that happened in the maritime shipping methods are starting to being solved. So we're facing competition from maritime cargo rates as well. Both these forces are putting downward pressures on yield prices. And more recently, we saw a surge in jet fuel price. That's what you see in the blue dashed line. So that's why we see a slight tick of yield price at the end of September. So looking forward, we're expecting the cargo traffic to decrease slightly this year before ticking up next year. And we're expecting the cargo yield price to coming off from its unsustained high levels in 2021 and 2022, and to continue to decline in 2023 and 2024. And nonetheless, we still expect the yield price to remain above pre-pandemic levels. You probably have already seen this chart before. Just a recap that with all the challenges, the wars, the volatility of oil price, the elevated interest rates, and the staff shortage, all of these weighed on the financial performance of global airlines. And despite that, we expect the global airlines to return to profitability this year for the first time since the pandemic, albeit we expect a net margin of 2.6% this year and 2.7% next year. This shows a remarkable feat and that achieved in an equally remarkable short period of time. Zooming in for cargo, for 2023, because of the drop in the quantity and in the volume and also the drop in the yield price, we expect the cargo revenue to decline by 37% year on year. And for next year, although we expect the yield price to remain above pre-pandemic levels, but the sharp decline in the yield price will offset the expected increase in cargo volume and resulted in a decrease in cargo revenue. However, compared to pre-pandemic levels, we still expect cargo revenue to be 34% above 2019 levels and 11% this year and 11% above 2019 levels next year. And in terms of the profit split between passenger and cargo, we expect this ratio to converge to pre-pandemic levels so that the cargo revenue would converge to around 12% of the total airline revenues. To sum up, 2021 was the year that we saw demand met with unprecedented innovation when Praetors came in to rescue. In 2022, we saw the year of stabilization with challenges, transitioning from crisis to a new normal. And in 2023, we saw consistent recovery and we observe steady month-on-month improvements. 2024, we anticipate sustained revenue growth, outperforming pre-pandemic levels.